What's up, everybody? This is going to be a little different of a video. I'm actually out of town right now, and I just went to the store to buy a microphone because I'm confident that what I'm going to explain in this video is going to give you key insight to trades that you may take in the future. Now, I had probably one of my best days so far this month, today on the 23rd. Not so much money-wise, but my execution was flawless. The levels worked out very well, and I want to go over 3 trades that I took. One was a loser, and 2 were winners. I want to explain why I entered, where I exited, and my overall thought process backing each setup. So the first thing that I want to explain is starting over in the beginning of the week. It was a short holiday week. On Tuesday, the 21st of February, the market had a very large sell-off. We broke below our 4053 key level on the S&P 500 and had a very large sell-off with what I call no bids in the market, where every time the market tried to move up, we failed and sellers kept putting pressure into the market. Now, on my Instagram, at Ameritrade, I'll post a link in the description below. I've been watching, and even in my past videos, my few past videos, I've been explaining about this 4053 level, that this is going to be bloody once we get below this key level of support. So Tuesday, we had a large sell-off. Wednesday, the market basically consolidated inside of this range right at our 3989 demand zone and rallied up. And now on Thursday, this is when I took these 3 trades, and this is when I want to break down. So the first thing is, let's go over the pre-market plan on Wednesday, the 22nd, because the levels were very similar to what we were watching on Thursday. Scenario number 1 on the S&P, and again, I post these every single day in the Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. So we had a key level at 4035 to 4053 that it may provide a nice opportunity to get short with valid confirmation targeting 4,000. Essentially, what I saw here was the market was very, very balanced. So you see these red lines over here, the bottom of this balance, which is about 4,000 key level, and the upper portion of this balance is around 4028 to about 4035 general area from the sellers at 10:30 Eastern on the 21st of February, which was Tuesday. So essentially, the market is inside of this balance range. Now, when you see the market being this balanced, especially with the volatility conditions that we normally have been seeing, essentially what you want to do is you want to fade the extremes, or you want to short the pops, and you want to buy the dips inside of balance with the overall market conditions. Hence why I was expecting to find sellers at 4028 to 4035-ish, all the way even up to about 4053, because if we recall from the pre-market plan, any rally that gets sold into 4035 to about 4053 may provide a nice opportunity to get short. Now, that was on the 22nd, which was Wednesday. We never actually hit that on Wednesday. It wasn't until Thursday where my new pre-market plan was essentially the same thing. I first want to look for a rally to fail at 4028 to 53 for a move back into 4,000, which is our target. This may bring strong sellers for downside continuation. Now, why I changed it to 4028 instead of 4035 was because of the balanced conditions. A lot of retail traders, or just traders in general, don't understand overall market conditions. And especially if you're a breakout trader, you're going to be longing, let's just say, the previous day high, or even the previous 2-day resistance right here at 4024, 4025. And I gave this about a 5-6 point wiggle room above it, that if a move up into this little red box over here failed, I would be interested in taking the market short. Now, my first trade of the day was a $250 loss, which I consider break even. I essentially sold where I bought at. And what I saw here was the market came up into this 4028 level, started moving lower. I saw sellers on the tape, and I even put in the Discord in the intraday commentary tab that I said the market's having a hard time here. I'm taking it short at 4027. My stop loss is above 4031, and then I'm targeting 4015 and then 4000. It was a small 4-point original risk. Then about 5 to 6 minutes later, we came down to 4020, and I was not favoring the action over here, and I exited for break even once the market started going lower. And if you were watching the tape, and if you're watching this video and you were watching the market at exactly 9:43, 9:44 Eastern, you're going to know exactly what I mean. The market came down into this 4021, 4020 level. And every single time the market came into this little oval right here, buyers or bids immediately stepped in and bidded the market higher. So if I'm in short up here where I entered and my stop loss is above the high and I'm expecting a further sell off to the downside, I see this action right here since I am scalping and I am a very short-term trader. If I see something indicating that buyers may be in the market and then the reaction out of that starts moving higher, I exit this trade before my original stop loss triggers to protect myself because I view this now as a potential red flag in the market. And then this caused a very, very small loss by protecting myself by spotting buyers at 4020. Now again, from the pre-market plan, the first scenario was finding sellers at 4028 to about 4053, this range. I don't want to be so bullish at this level just yet. Bulls really need to prove themselves. This is what helped me avoid taking the market long. I could not trust a rally inside of this pink box. It's just not acceptable for me. And the buyers in the market auction don't indicate that they're strong or accepting prices higher. So I see this rally up. I did not short this strength into supply. Instead, I shorted the next trade was a breakdown below the same exact oval over here. Once we failed at 4035, that was the same level we were watching yesterday. So more specifically, 4035. As soon as we came into 4035, which was the high of day today, the market started moving lower. In hindsight, maybe I should have shorted the highs, but instead I shorted the breakdown at 1006 below and speculating that that 4020 area that we found buyers earlier that I stopped out at, I was speculating that sellers were going to prove strength now and take out those buyers that were buying earlier in the day. So now this was my second trade, which was about a $4,900 profit. Again, I'm on vacation, smaller size still due to the volatility and the conditions. My stop loss was 4032. Now I'm in this trade at the oval over here. Again, stop loss near the high. We consolidated for a while, for about 30 minutes. And I'm not going to lie, my finger was on the trigger to stop out of this position right here. I did not like the breakdown below 20 and an immediate reclaim in a 3-minute period back above VWAP. My finger, if this happened and we moved another point up higher, I most likely would have stopped out of this position for another $500, maybe $700 loss. My finger was literally on the trigger the whole time. Instead, we started moving lower and then the volume started to increase. I love to see increasing volume. I love to see a fast tape right into 4,000, and I covered this full position following the plan. Now, the next update I sent out was about 11 o'clock. I said, I'm watching scenario number 1 from the pre-market plan, which was laid out perfectly. And what I was watching now was I'm not interested in chasing another breakdown at 4,000. It's already 35 points from the high. And in my opinion, it worked out. So today was one of those days where it could have worked out. But if you're shorting, let's just say a 50 or a 70 point sell-off to the downside, where is your risk? Number one, you're chasing. And number two, where are you going to put your risk? If the risk is too high and you're chasing an extended move, it's just not favorable in my opinion. And I recommend at least not taking it. And if you do take it, at least size down so you protect yourself in case the market does want to have a sharp reversal. But now what I was watching was to play short again were two things. Again, this is not hindsight. This is all updated in real time for levels we're watching, why we're watching out for them in real time. Scenario number one was if we offer below 4,000 and it acts as resistance once we're below it, I would love to play short again. And then 3980 was the other key level below that. We broke below 4,000. It acted as resistance. This is sort of a break and retest type of strategy. Sellers stepped into the market at the 1113 candle. I entered the market short, stop loss above this previous high. In this case, I was risking 4 points to make about 20 points to the downside. The market sold off into this demand zone, and I covered my full position into 3980. I left some money on the table, but I always follow my plan, and I never look at, okay, I could have just made an extra $1,000 if I held for another 2 minutes. I look at, did I follow my plan? Did I enter when I should have? Did I exit when I should have? And did I stop out of the trade when the market proves my analysis to be incorrect? And that last trade was about a $4,000 profit, about a 2.3 planned risk. By the time I exited my position, it was about a 2.1 R that I did secure. So not the biggest monetary day. I will take it, especially since I'm out of town. And I actually am recording this off of a laptop. And it seemed like everything that I was doing today and all the levels we were watching worked out perfectly. A lot of members are also killing it. $11,000 on the week, $1,000 profit, $700 profit. $1,400 profit. So when you use price and volume, it becomes easier to see the market and trade the market just because you're going with the flows of what it provides you. And also, if you haven't followed me on my Instagram, again, the link will be in the description below. Check out all the links in the description below. Every time I post one of these videos, I get questions about the Discord. I don't charge for it, but it is only available for members of the Amertitrade community. I'm going to end it on that note. Peace out.